Standing by as well for the latest decision from the Reserve Bank, increasing pressure to potentially raise interest rates at some point. Not expected to do today, but who knows? Business Editor Ross Greenwood is with me. Ross, other central banks have actually started cutting rates. The expectation today is a hold, but the increased possibility, I'm not saying it will happen, is the next move is not necessarily a cut as well. And that's going to be key once we have the minutes released today.
Oh, absolutely. It's all about the language today, Tom, there's no doubt, because it's suggested now that August is the live meeting, and we're going to see this in just literally a second or so now. Interest rates on hold as expected at 4.35%. So the Reserve Bank has kept interest rates on hold at 4.35%, and very shortly we'll update you with the latest statement from the Reserve Bank as well. But in the meantime, the reason why there is pressure mounting on the Reserve Bank is, unlike other countries, employment here remains very, very strong. And on top of that also, there are signs that inflation is not reducing as quickly as what the Reserve Bank and the government might have forecast. And that's the reason why, while, say, the European Central Bank and the Bank of Canada have already cut interest rates, the Bank of England was expected to go as well. Here in Australia, it's expected that if we don't see another interest rate cut, a tap on the brakes as it were, it may very well be that we've got a long period of time when this cash rate remains at 4.35%. So just going through where the Reserve Bank today is talking about this monetary policy decision, it really is a situation where the key aspect of this is going to be effectively where the Reserve Bank expects inflation will go. So here's the immediate market reaction. And indeed, you can see that there's actually a little blip downwards in the one-year bond yield. You can see over the past 2 days, they've broadly stuck around that area of around 4.25% to 4.3%, just lurched down a little bit. You can see that the stock market has jumped a little bit. It had been up by around 0.7% before this decision, now up by 0.97%. So this is all really, if you like, suggesting that the Reserve Bank again is leaning in to suggest that there's no certainty as to whether the next move in rates is up or down. The Australian dollar also pretty much hovering and keeping its ground. The Reserve Bank says today that while recent data has been mixed, it's been reinforcing the need to be vigilant to the upside risk of inflation. The path of interest rates will best ensure that inflation returns to target in a reasonable time frame remains uncertain, and so the board is not ruling anything in or anything out. Now, the important aspect of that, Tom, just to explain this, in keeping this cash rate steady, not ruling anything in, not ruling anything out, is not an acceleration of the Reserve Bank's language to suggest that it might need to raise rates again in the future. And so by saying that, and we'll hear more from Michelle Bullock in the press conference a little later on, it's really right now saying that nothing much has changed from the previous month, notwithstanding the very strong employment numbers and the inflation numbers that we've seen since then.
So as to summarise, I know you're sort of still going through it and it's just landed, but it seems to me a similar bias to what was before, that there's no obvious shift. There's been a fair bit of economic data out, and as we've been saying over the past year, you know, it's sort of mixed, I suppose, in terms of various indicators. The
Yes.
obvious key, crucial one is the next quarterly inflation, and that's why you alluded to that live meeting in August, right? We get the June quarter in July and the meeting after that where they go, right, where are things at? Albeit tax cuts are still not yet to filter through at that point, are they?
Yeah, that's true. And of course, that's going to change the dynamics in the second half of this year, in particular spending and potentially even on inflation. Headline inflation will potentially come down because of cost of living measures by the government. But two little headlines in this statement today worth just reading out. One says inflation remains above target and is proving persistent. So again, that shows that the Reserve Bank is vigilant. The second one says the outlook remains highly uncertain. Well, you don't have to be either a central banker. You can be a business or you can be a household, and you'd know that the outlook is certainly uncertain right now. But the reality is that it appears the markets have reacted to there being no acceleration of the language of the Reserve Bank. So your scenario, Tom, I think is the one that plays out. They'll wait to see the quarterly inflation number. If it really hasn't improved significantly, then that's the reason why that August meeting could very much remain a live meeting, potentially to an interest rate increase, unless things have changed.